Ever heard of Palantir? No, it's not a Lord of the Rings magic orb, though the founder did name it after Tolkien seeing stones. Palantir Technologies is a Silicon Valley data analytics company founded by Peter Thiel and friends in 2003. In plain English, they build software to help governments and big companies make sense of huge piles of data. Think of it as the CIA and Wall Street's very own supersmart spreadsheet. In fact, Palantir's Gotham platform is literally used by militaries and counterterrorism analysts, including the U.S. intelligence community and Pentagon, while its Foundry platform crunches data for banks, drug makers, and airlines. So yes, Palantir is that secretive startup that powers some of your favorite conspiracy theories, and also helps reroute ambulances and track COVID data in real life. Government contracts and the Musk menace. Here's the catch. About 55% of Palantir's revenue comes from government contracts, and 75% of those contracts are with U.S. federal agencies. In other words, Palantir is basically Uncle Sam's favorite pet project. This makes Palantir highly sensitive to Washington budget changes. Enter Elon Musk. The world's richest meme lord once floated a pretend Department of Government Efficiency, aka Doge, yes, like the Doge meme, to slash federal waste. UBS's analysts point out that if Musk's cost-cutting scheme, or any real budget cuts, gain traction, Palantir could feel the squeeze. Picture it. Musk's Department of Government Efficiency might cancel a big Pentagon software deal, leaving Palantir twiddling its thumbs. Wired notes Musk actually ran a government API hackathon under that Doge banner. Palantir was even on site helping modernize IRS data. In short, Palantir is riding a government gravy train, great for steady income, but a knife edge for fiscal cuts. As UBS put it, Palantir's deep ties to Uncle Sam underpin its revenue today but also pose a big risk if Congress ever bans snacks or uses only lead pencils tomorrow. UBS actually trimmed its revenue forecasts when they saw Washington eyeing the checkbook. UBS's take, cloudy with a chance of AI. UBS's analysts have a nuanced view. On the one hand, Palantir is brilliant at AI and data software, and its platforms could be key to future government and enterprise AI projects. On the other hand, UBS warned, near-term risks loom large because of those budget jitters. In practical terms, UBS kept a neutral rating on the stock. They like Palantir's high-tech promise long-term. So UBS is essentially saying, Palantir might become the next cloud whiz, but don't count on government contracts to boost this year's sales. Palantir's stock price, the $100 roller coaster. Now let's talk stock. Palantir went public, via a direct listing, in 2020 at about $10 per share. Fast forward to 2025, and the stock has roughly 10 times it's cruising around the $100 mark. That's the second time ever it's hit the century mark. The first was briefly in 2021 or early 2023 before a pullback. In fact, as of April 2025, Palantir was up about plus 30% just this year and flirting with $100 again. And it's all on the same number of shares. Palantir has never split its stock since IPO. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. If you are interested in stock news updates that might be relevant to your financial targets, join us and become a member for member-only videos. Find the link in the description section below. Why does that matter? Because it means Palantir's market cap has ballooned. A $100 share price today corresponds to a $200-$270 billion valuation, more than possibly IBM or even big names like Merck. Long-term investors like the founder-friendly structure, but retail punters sometimes grumble that a $100 plus share looks expensive. They possibly point out that nothing magical happened in Palantir's earnings to justify a 10 times price jump, it's mostly expectation of future AI glory. But recall, no stock split has been done, so that $100 is on the same share count that was $10 in 2020. In other words, Palantir's stock price has been on a roller coaster, but it's still riding the same car. If it feels not cheap, that's mostly optical. Some fans possibly say the stock looks high, but a majority of its market cap is growth and future promise. Stock splits, cheap illusion versus real impact. Traditional wisdom says a stock split makes shares look more affordable. Remember Tesla's 5-for-1 split in 2020? Possibly overnight $2,500 shares became $500, and retail buyers who wanted Tesla stock suddenly could almost afford a full share. A split doesn't change any fundamentals, you still own the same slice of the company, just sliced thinner. The positive of a split is purely psychological and practical. It lowers the per share price, opening the investment to a broader range of people. If investors or employees think $10 per share is nicer than $100, splits can help. Could Palantir split and give the same effect? Yes, it could make each share look cheaper. For example, a 10-for-1 split at $100 would give shareholders 10 times the shares at $10 each. But savvy analysts note an important counterpoint. Sometimes high-priced tech stocks just don't bother with splits, and it doesn't seem to hurt them. Both IBM and Snowflake have higher per-share prices than Palantir while each has a lower market cap, suggesting a split might be unnecessary. In other words, Palantir could go splitting free indefinitely. IBM's share count is smaller by design, and Snowflake's newly public share base is huge, but neither rushed to split. Splitting Palantir. Pros and cons. On balance, a stock split wouldn't boost Palantir's intrinsic value, but it could shift market sentiment. A well-timed split is often seen as a signal, the company is confident that its share price will continue to climb post-split. Retail investors psychologically like seeing prices in the low two digits. For instance, possibly Qualcomm did a 4-for-1 split and then its stock zoomed higher. Splitting can be a self-fulfilling confidence boost. Conversely, tech giants that wait too long can become unloved by casual traders. If Palantir splits, here are a few possible benefits. Broader appeal, shares at $10 or $20 can be easier to buy for small accounts or employees with grant budgets. Lower prices mean more whole shares per dollar, and some retail funds only buy in round lots. Liquidity, potentially more buyers and sellers if the stock feels in reach, which can tighten spreads and improve trading volume. Signaling confidence, announcing a split often signals management believes in future growth, e.g., look, we think it will keep climbing, so let's make it cheaper now. Of course, there are downsides too. The only real downside is the optics. If Palantir splits and everything else stays the same, the company's valuation doesn't magically double. Some value investors hate splits as gimmicks. And if a company splits at the wrong time, e.g. right before a downturn, the temporary buzz can backfire. But possibly many tech companies consider it a no-brainer when their shares get over, say, $300 to $400. What if Palantir waited to split at $900? Let's crank the dial to 11. Imagine Palantir truly goes parabolic and hits $900 per share before splitting. What happens then? Math time, a $900 share price implies roughly a $2.4 trillion market cap, assuming share count 2.7 b, by then Palantir would be chasing the top tech giants. A 10-for-1 split at $900 would cut each share to $90. Fans could buy a whole share with pocket change, and everyone would feel like geniuses, until the inevitable post-split jitters. It's our privilege that God the Creator of heaven and earth will bless us abundantly, make us the head and not the tail if we love Him and obey His commandments. Please acknowledge Him in your plans and He will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in more relevant stock news updates, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today, your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you, see you in the next video by God's grace, we love you, and blessings to you.